Well, top of the morning to you. So I want to give you an interest rate update. Again, we are following the 10-year Treasury. And what I want to show you here is the current uptrend that we're in and what might happen, especially since the Fed meeting is tomorrow. So as you can tell, we've been in this uptrend for quite some time now. And let's see here. We are trading in this channel. And most of the time, bonds or stocks or anything that can be charted trades in ranges or channels. And so right now we are in this upward channel. It has stayed in the upward channel. I know, about a week or two ago, we had that really big rundown in rates, where they went from mid sevens to the low sixes, and that was right here. And you'll see these blocks right here. Red means that there's a quote unquote sell block. So there's a lot of selling pressure to bring the price down. And here, the blue block means that there's a lot of buying pressure pushing the price up. So the way that this works is the 10-year Treasury rates are pretty well correlated to this. You can guess at about a 2.5 to 3% spread most of the time. But with this being said, currently it is being pushed upwards, and rates are still in the uptrend and they're still trading in this channel. The only hope is that the Federal Reserve comes out and says something that could possibly shake up the markets. Or the other piece is we will likely stay in this little range right here, because you can see we've tested this level several times back here, and I'm sure I can go back here and yep, you'll see we tested that level again there. So this level is pretty significant that we're at on the 10-year 4.353. So it might hold as long as nothing crazy happens. If so, it will trade in this little channel, and this is called a wedge. So eventually something will break out of this wedge. So you'll see here, it'll go and it'll consolidate in this little small range where my mouse is until it breaks out to either side. And if there's enough selling pressure to break to the downside, and that would start a downtrend at that point, because then it would then break out of that upward channel that we currently have. So you have two kind of levels here that are playing with each other, and essentially, essentially one will win. You have this really strong resistance level that's been here for a long time, and then you have this upward channel. So one's going to win, but for now, I would stay locking your loans and locking in your mortgage rates right now, because who knows what the Federal Reserve is going to say tomorrow at their meeting. They're not going to lower rates, more than likely. A lot of it will be based off their commentary that they have afterwards. So again, I'd be locking right now. Make sure your clients are ready to rock and roll. Make sure they're locked in, because tomorrow we really could go either way. There's a saying that range bounds the rule and a breakout's the exception. So I would assume that we are probably going to stay in this upward channel for now, unless something happens. So hope that helps. Have a kick-ass day.